Nimesh, investing can feel overwhelming for first timers, especially for someone who's just starting out or even someone who is starting late in life. What would you say to someone starting out in their investment journey?
So typically bull markets attract a lot of people in, right? Nobody opens a new demat account, or very few open a new demat account in a bear market. Everybody gets excited about equity markets when everybody is excited about equity markets. So that's one thing that people should be a little cautious of, that they get sucked in because they see that 2 years, 3 years market has gone up, it has given fantastic returns. Why am I not investing? I think that's the wrong reason to come into the market. Some people who think that in bull markets, it feels that making money is easy. So essentially, they think market is providing a free lunch. Let's go for that. And then they become lunch for somebody else during the market fall.
Yeah.
So I think whenever a new investor, a young investor comes into the market, it has to be for long-term goals.
Okay.
To meet their long-term financial goals, understand how over a longer term the market works.
Sure.
I think that's very important, to come with a long-term perspective. Research well before you start your investing and when you are investing. And I would also say evolve a investment philosophy and process. Nobody is 100% right in investing. But if you analyze your successes, your failures, your losses, and evolve a process that this is what works, I think that for a young investor can lead to good long-term wealth creation.
Very interesting. You've seen markets over decades. Are there any lessons from your early career, that resonate strongly in today's investing environment?
So a lot of them, actually. We all start with thinking again, that it's easy to make money in the markets, get sucked into a rally, follow the crowd all the time. I think one of the most important lessons is that crowd is right on trends but wrong at ends. If you analyze centuries of market movement in any asset class, right from gold to tulips to stocks, you will find patterns that though events were distinct, patterns are similar. That people get excited about an asset class or a theme, and they chase that theme to high valuations. Expectations are very high. People start believing any narrative that is given to them, end up paying extremely high price. Then over a period of time, realize that the reality is very different from the narrative that was sold or the story that was sold. And then there is a panic to get out. That, okay, we made a mistake. You get out. And then they overreact on the downside. So I think understanding this aspect of market, that within these business cycles and economic cycles, there's a very strong sentiment cycle, which exaggerates these highs and lows. Understanding that is extremely important in investing. It was true earlier, it is true now.
Mutual fund investments are subject to market risk. Read all scheme-related documents carefully.